Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PATTERSON UTI Energy INC quarterly report. PATTERSON UTI Energy Inc. provides a wide range of businesses and services to the oil and natural gas industry. These include contract and directional drilling measurement while drilling, MWD, services downhole performance motors and MWD systems, rental electrical controls and automation for various industries, equipment servicing and recertification software, and data analytics technology, including plus MWD survey fault detection, isolation and recovery, FDIR, plus Hi-Fi Nav for improved vertical placement of wells, plus Hi-Fi guidance for trajectory optimization completion services, such as plus hydraulic fracturing, plus wireline and pumping, plus completion support, plus cementing power solutions and natural gas fueling last-mile logistics and storage drilling products, including plus matrix and steel-bodied polycrystalline diamond compact drill bits design, manufacture, sale, and rental oilfield tools, rental specialized services for land-based oil and natural gas drilling, completion, and workover activities. The significant drop in PATTERSON UTI Energy Inc.'s stock price can be attributed to a combination of company-specific challenges and broader market pressures. The primary causes include substantial net losses, weak industry outlook, U.S.-China trade tensions, analyst downgrades, and achievement of 52-week lows. Substantial net losses have been a major contributor, with the company reporting significant losses in both 2024 and 2025. This trend was exacerbated by an $885 million goodwill impairment charge within its completion services segment. Additionally, the weak industry outlook and stagnant operations have led to reduced revenues and a lack of growth momentum. The escalation of U.S.-China trade tensions in April 2025 also had a significant impact on the company's stock price, with a 19.41% decline in a single day. Analyst downgrades further contributed to the decline, as multiple analysts expressed concerns regarding margin pressure, declining domestic drilling activity, and potential disruptions in oil and gas trade. The achievement of 52-week lows in both November 2024 and September 2025 reflects the extent of the stock's decline over the past year. Overall, these factors have combined to cause a significant drop in PATTERSON UTI Energy Inc.'s stock price, exceeding minus 13.29% over the past year. The primary drivers of revenue growth or decline can be identified in the following key areas. Revenue growth is primarily driven by the expansion of drilling services, including an increase in Tier-1 rigs and the adoption of natural gas-powered solutions. Additionally, advancements in completion services, such as the Vertex fully automated completions process, have contributed to revenue growth. On the other hand, revenue decline can be attributed to several factors, including a decrease in operating days in U.S. contract drilling business, lower activity in fracturing operations, and lower demand for drilling products due to market conditions and customer capital spending budgets. Net income and profit margins. A shift in fortune, the financial landscape of a company, has undergone significant changes between Q3 2024 and Q3 2025. Notably, net income has improved by $942,359, shifting from a loss of minus $978,334 to minus $36,450. This improvement is also reflected in the year-to-date YTD figures, with a decrease in net loss from minus $915,007 to minus $83,857. However, profit margins have taken a hit due to various market and economic factors. Operating income margin has decreased from minus 72.8% to minus 2.38%, while adjusted gross profit margin has declined in both the drilling services, 16.3%, and completion services, 33.3% segments. The reasons behind these changes are multifaceted, including a decrease in depreciation, depletion, and amortization expenses, as well as the impairment of goodwill and other assets in 2024. Additionally, market uncertainties such as lower crude oil futures prices, rising geopolitical tensions, and reduced activity forecasts have contributed to compressed profit margins. Overall, while net income has shown significant improvement, profit margins have taken a hit due to external factors. The company is generating a significant amount of positive operating cash flow, with net cash provided by operating activities increasing from $859,702 in 2024 to $563,693 in 2025. This increase indicates a strengthening financial position for the company. Furthermore, the company's operating cash flow remains consistently high at $564 million, demonstrating its ability to generate sufficient liquidity. With a substantial amount of cash and cash equivalents totaling $185 million, the company has ample resources to meet its financial obligations, solidifying its positive operating cash flow performance. The company's debt level and interest expenses have shown minimal fluctuations over the given period. Long-term debt has remained relatively stable, with only slight increases from $1,219,770 to $1,220,716 on page 20. Interest expenses have also decreased by varying percentages, ranging from -0.9% to -2.8%, but these changes are not significant enough to indicate a substantial shift in the company's financial situation. Overall, there is no clear indication of a significant change in debt level or interest expenses across all pages. The financial performance of the company's segments and regions varied significantly in 2025 compared to 2024. The Cementing Services Reporting Unit and Drilling Products segment performed well, with an increase in operating income from $9,136 in 2024 to $37,124 in 2025. On the other hand, the Completion Services segment struggled, resulting in an $885 million impairment charge due to its fair value being less than its carrying value. The segment's operating loss also increased from -$848,311 in 2024 to -$75,806 in 2025. In terms of regional performance, drilling services saw improvements in various regions, including West Texas and Appalachia, which had a high number of rigs. In contrast, East Texas had the lowest number of rigs among all regions. Management is expressing cautious optimism about the company's outlook, citing several factors that could impact its performance. The prolonged trade tensions and lower crude oil futures prices may negatively affect the company's future outlook. Additionally, industry-wide pricing pressure in the completions market is expected to persist, compressing adjusted gross profit. In terms of specific segments, drilling services are expected to see a slight decline in adjusted gross profit in Q4 2025, while completion services will experience declining adjusted gross profit with less seasonality compared to Q4 2024. Drilling products, however, are expected to see slightly improving adjusted gross profit due to higher revenue from international business. Management is confident in the company's liquidity and cash flow, stating that it has sufficient funds to support its current plans for at least 12 months. The forecast for cementing services assumes lower activity in 2026 compared to 2025, with moderate growth estimates thereafter. The company has demonstrated a commitment to returning value to its shareholders through two key initiatives. Firstly, it has paid dividends to its common shareholders, with a cash dividend per share of $0.08 and total dividend payments amounting to $92,114,000. Secondly, the company has also implemented a stock buyback program, which allows for the repurchase of shares from the market. This dual approach reflects the company's focus on rewarding its investors while also maintaining control over its capital structure. That concludes the financial summary for PATTERSON UTI Energy INC. Feel free to comment below, and I will be happy to answer them when possible.